You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology, and we have got a big bundle of fintech goodness for you this week. We've got 3 more interviews that we gathered from Finovate out in New York City, a great conference a couple of weeks ago. We're going to be talking to the leaders of Wish, Gentrio, and Veep Software, all companies that I thought made quite an impression while I was out there. I'll also be sharing with you my overall list of the top 6 companies that I voted for Best of Show, and sharing some other content along the way. Because we got so much going on, let me try to dispose with the pleasantries as quickly as possible. If you are a regular listener, you already know that you can find out more about the Best Innovation Group by checking out our website, big-fintech.com, where you can always follow us, particularly on LinkedIn, probably the most active place these days. And if you didn't already know those things, like the website, humor me. Take a look, and you can find out more about the what we've got going on with the company. Continuing, as I said, last week we had our first wave of content coming out of Finovate. I do want to mention right off the bat, they did a really bang-up job this time of getting the live demos up on site already. You can go back and watch the 7-minute demo videos, the 63 of them, all 63 that were on stage in New York City. I think it's an incredible resource that I think it's one of the best kept secrets around. We'll post a link to that, and you can go back. You can also go back and listen to our episode last week, including with Best of Show winners Virtus AI and KSAP. But all those videos are up there, and the folks we'll be talking to today, you can track them down as well as the other ones that I thought were standouts over the course of the last week. We also talked last week that kind of the key themes when you thought about the videos that were, the demos that were on stage. Not surprisingly, artificial intelligence, fraud and authentication played a big role, and so did origination, loan origination, very popular. A really big topic in the, I guess, outside of competition points. I don't know how else you would say that. The conversation in the hallways, some of the other sessions that were taking place. One of the things that has really kind of piqued my interest recently as well is open banking and the incredible shifts in Section 1033 that have been taking place, and even more taking place even since the conference. As you know, the whole notion of open banking and the rule that was set by the CFPB got rescinded. Again, choice of words, I'm not sure if that's the technical term, now being revisited. Decide which verb you want to use. In the meantime, things got even more interesting, and this was the conversation out there. We were already talking about what the future of open banking held, particularly after the surprising news of Chase issuing a whole new price list of what they were going to be charging data aggregators to access the data coming out of Chase. That was the big conversation. Had a really good talk over lunch, some roundtable discussions being held with Alex Johnson from FinTech Takes, who shared his perspectives on that. And since we've had the conference, the new news came out, and this again is kind of a real blindside. I don't think people expected this quickly. Plaid has now announced that it has reached agreement with Chase on new pricing. Not necessarily the rate card that Chase had put out, but that kind of sets the standards. I don't know if you want to say they agreed, capitulated, collaborated. Choose your word. We don't have enough time to dig into all the details here, and I thought that Alex Johnson did a spectacular job in his most recent newsletter in FinTech Takes. So rather than repeat everything there, but I will mention the whole notion of prisoner's dilemma that you're probably familiar with. He used that as his metaphor when we were speaking on site, and he goes into that in pretty good detail in this newsletter entry that he did. I'll just point you to there and suggest that that's a great place to kind of get caught up. I'll post a link to his newsletter. I believe you do have to wind up signing up for it to actually get access to the article. Trust me, it's worth signing up. He does a lot of really good stuff. So check that one out. We'll be talking more about it as in the coming weeks, months, years, who the heck knows. The other theme that I always talk about a lot is the great wealth transfer. And I thought, and I wouldn't say it was an overriding theme of the conference, but there were several companies that I saw that are definitely looking at retaining assets and relationships over the lives of not only individual members' life cycles, but also their overall families. So this first entry, we've spoken to our friend Alex Mechanic before from Wysh. That's spelled with a Y, W-Y-S-H. He's got some really interesting ideas in terms of how to actually try to foster that retention. They were not technically on stage at this one, but they also did have some new product announcements, and I thought it was worth catching up with Alex on the latest on that front. So let's have a listen. Here with Alex Mechanic, founder and CEO of Wysh. We've spoken before. You've got some interesting new stuff going on, and I thought it tied in really nicely with a few of the other conversations I've been having here around the great wealth transfer and kind of a way to retain relationships and deposits within your financial institution. Alex, thanks for taking the time.
Hey Glenn, thanks for having me, and I really appreciate being here. Just to give your audience an insight of who Wysh is, we're a business to consumer company designed to help financial institutions layer protection on top of their core offerings. And we're really excited with the evolution of what we've been building. And over the last 6 months, even since we last spoke at Venture Tech, actually.
That's right. Yeah.
We had one of our partners just go live, another one proving out, product market fit of our offering of life benefit.
You mentioned you've got a new case study that you kind of like. You love the fact that you get to keep adding those. And again, the idea is it's a life insurance benefit for customers. So if the primary account holders to pass away, it's a 10% typically bump on the
That's
balance?
correct, yeah. And many of these community banks that we've kind of been first movers have found that two big things are happening for them. One is they're able to grow their deposits as much as 3% by just offering this benefit, knowing that a lot of these customers have deposits at other spots. They're moving it over because their deposits are working harder at these institutions. And this is happening in the first 180 days.
I remember we've talked before too, it's not only just moving it over, but if you need to actually take money out, you're more likely to take it out from someplace else.
Exactly right, you nailed it. And I think the other thing we were promoting, but now we're seeing reality, is that this is really targeting this older millennial who's kind of had to look for stability and resilience to survive on their own. And so as these community banks and credit unions are looking to attract this younger audience, it really is resonating with this next generation. And we've been able to help our partners reduce the average age across their accounts by 2 years, because the average age of their new account opens are 9 years younger than they were previously seeing before adding this benefit. So as someone that was excited to build this novel idea, it's awesome to bring it to market. And what I'm happy to talk to you about is the evolution of that, to show that we're asked that these institutions have a lot of older customers.
I was going to say, music to the ears of credit unions if you can bring down the average age overall and of new account members and attract new account members. But I know that's the new piece you've got, is more of a service offering to really help institutions understand the exposure they have.
Exactly right, because many will sit down with us and say, well, we have an average age of 65 or 70-year-old audience or members, and what about them? And we say, well, really, Life Benefit, our core offering, is designed to help that younger audience. But what we are able to do is take our actuarial in-house models, pair it with their actual data on their end, non-sensitive PI data, and be able to build out a 10-year forecast so that they're able to see what is the risk among their older audience. And I think it's important because many institutions experience a 1% attrition across their deposits each year due to death. Many of their deposits are held with large account holders there. And so while few people will die each year within their account holder base, the amount of deposits that flow out due to that is very large.
And the logical assumption would be that the older account holders are the ones who have accumulated wealth over time and have the greater level of wealth.
Well, and the other thing too is they're actually becoming the less profitable customers too, because they're not looking to purchase new loans or other items. So you're really kind of costing institutions a lot of money to service these customers. So it's a chicken and the egg situations that they're balancing. And so with Wysh Intelligence, we're able to give them this 10-year forecast that layers out the risk of their deposits over time and help them understand the risk of the value of their customers or members over time, so that they can design programs to offset that. And one of the things that's excited about being at this Finovate event and meeting many people is we can see a lot of kind of post-mortem or death kind of services or retirement-based services to support these people. And how can you support them correctly? You need to understand where they sit in their life cycle. And yes, it's a morbid discussion, but from a business perspective, it's a necessary discussion.
Now, is this a bespoke kind of one-time report, or how is this delivered?
Yeah, so it takes us about 3 weeks to run the analysis of the report. We do believe it will last up to a year. If you see significant growth in your audience or a transfer, then we maybe would recommend doing it twice a year, but it really is designed to kind of refresh. Now, if you are growing your customer base, 3-5% year over year, this report really can kind of be a one and done, which is totally fine with us as well.
So, let me stop. Actually, while we're stopped, let me ask, the thing about over 65, is that something you want to publicize yet? Or is that something you don't want to talk about?
That's okay.
Okay, so I'm going to ask you that question too.
Yeah.
There was something else that I just blanked on in terms of this last piece. Oh, I know what it was. So you're offering some suggested solutions as well in terms of programs for retention, in addition to the actual exposure analysis?
Yeah.
So I'll go back. So, addition to this report actually, highlighting the exposure, you also offer some suggestions of what retention programs and things along those lines?
We do. We kind of look at our own internal products as well as some of the partners that we've met over time to help them offset that, and we're happy to make introductions because, again, we want these institutions to be successful. We know where we do well, we know where we don't, but we've been able to build a really nice kind of group of partners over time to help that.
A natural ecosystem. You're dealing with one specific pain point.
Exactly right, yeah.
We talked a little bit also, you'd mentioned, I was not aware of this before, but I guess it's just the kind of the par for the course, the way things work. Your life benefit on your insurance ages out at 65 currently, and now you're looking at maybe extending that as well?
Yeah, so it's actually the reverse, and I think it's a great question to highlight, is we can cover up to the age of 80, but many of our partners are turning it off at age 65.
It's the FIs that opt out.
Yeah.
Gotcha.
And it's okay because what we're educating them on is that in our insurance world, there's a term called working insurance, which essentially says, well, you're still working and building your net worth and working towards retirement.
You're being cut short before you can actually finish the task.
Exactly right. You need these levels of protection. But once you retire, your needs fundamentally change. And many insurances that people have don't need anymore. They could shed it and switch. You could go from term insurance to long-term care insurance because you need to move from a perspective of protecting future wealth growth to how do I manage my money that I've earned and stretch it as long as I can during my period of retirement. So we educate the institutions to kind of package that way. And what we're excited about is we're seeing individuals age out of life benefit, and we receive zero negative feedback to that experience as well, because ultimately those people understand that their life and needs are changing, and these institutions are getting smarter to help them as they are moving into wealth management and other forms of assistance in their banking experiences. And so it's really kind of playing a really great story.
It's a life event. It's exactly one more thing that you can engage in.
Yeah, it's all right to transition from one part to the other, and bring that transparency and awareness is what these customers and members are looking for, more so than, oh, I lost the benefit. That's not how they feel.
Very interesting. I always enjoy hearing what you got going on. As you know, I'm very interested in this space. Both what you're doing specifically, but the whole idea of bringing on younger members. If people want to find out more about Wish, what's the best way?
Yeah, best way is to visit us at wish.com, WYSH, and then you can just click on Get Contact Us, and we'd love to speak to anybody who's interested in learning more about how to attract younger deposits, or if you have an older demographic and how you can kind of support or forecast to make sure you're getting the best out of the relationship with them, we can help you do that as well.
Alex Majanik, founder, CEO of Wish. Again, always enjoy talking to you. Thanks so much.
Thanks, Glenn. Appreciate it.
So there's salvo number one on the great wealth transfer front. Second one on that front, and using a slightly different term, and I'm just going to let them talk about it themselves. Renee and Julie Fry from Gentrio, a company that I was not familiar with until they got on stage the second day of Finovate. I'm here with Renee and Julie Fry, the co-founders of Gentrio. If I'm not mistaken, you were the next to last presenters of 63 over 2 days at Finovate, which at that point, people are getting a little tired, I would think, but you still stood out to me. So I think, first off, kudos for that. And thanks for taking the time. I want to talk about Gentrio.
Thank you for having us. We really appreciate it. And it was a great event for us. So we really enjoyed being there. Yeah. And it's so nice to be able to meet people in the industry. And the fact that you thought that we stood out was great because we really, really love what we do. And we were really happy to share our story.
And that came out both on stage and then in the conversations that I had with you on site afterwards too. I really like, the way that I'm thinking about it. I know you're focused, your primary product at this point is more around estate planning and wills. But I'm thinking about it in the terms of the great wealth transfer. And you kind of kick that off with where the name Gentrio comes from. Why don't we kind of start there?
Yeah. So for us, Gentrio means 3 generations. And so many people that we know caring for aging parents themselves. And then like us, I have a 14-year-old son. So it's that 3 generations. And when we think about the wealth transfer, it's not from just grandparents to there's parents to children, grandparents to children. And so it gets pretty complicated. And so when we founded Gentrio about 6 years ago, we were dumbfounded by how many people didn't think they needed estate planning. And the numbers today, because prices on everything have gone up, you can lose almost 10% of an estate's value to legal costs and administrative costs. And so we're like, okay, we need to change this. So Gentrio was born.
That's amazing. I mean, that 10% number, I had not heard that. I think of it just in terms of tax avoidance and, oh my gosh, we don't want to be tied up, in probate forever. But I hadn't really thought about the level of cost that could come into that as well.
Yeah, the court and the legal fees, and then the probate stuff, that's where people don't even know what they're about to go through. And so we've been really on a mission first to educate people, but more so get them to do their estate plan because it is for everyone. So we're on a mission to make sure that people know that estate planning is not just for the wealthy, it's for all of us.
Now, I'm embarrassed to admit that I'd never heard of you until you got on stage at Finovate, but I understand you're already live in place with over 100 credit unions.
We are. It's really been a great reception that we're getting from the credit union space because we really have the same mission of protecting our members. And we've been very fortunate because once we get involved with credit unions support each other. And so they're our best way of getting new users because they're telling their friends, their other credit unions, and we're growing at a pretty rapid rate.
Is it fairly? I know you've got some good kind of partnerships with some of the Northeastern credit union leagues. Yeah, is your base of credit unions largely in the Northeast, or is it nationwide?
We have a strong base in the Northeast, but we are nationwide.
Okay. Now, Julie, I remember just from hearing your background as well. I mean, you come at this not from a credit union background. I don't think either of you, if I'm not mistaken, have a credit union background, but you actually come at it from the elder care side, correct?
I do. I actually started my career with the National Association of Home Care and Hospice and started the National Private Duty Association because I've always been so committed in helping protect the elderly and caregivers. And when we went through helping our parents establish an estate plan, I kept looking at it thinking, this is something that everyone needs, especially the elderly and the caregivers, people who are making sure that they're organizing their lives for their family members. And really, Gentry was built on trying to make sure that we can help our members and, for me, protect elders and seniors.
That's great. Now, your lead, I guess, to lack of a better term, your lead product is the estate planning, but you're looking more broadly across, lifetime life, events.
Milestones.
Milestones. Thank you.
Yeah, no. We call it the life milestones because people don't wake up saying, "I'm getting a will today." It just doesn't happen. You probably heard us say that, but they know they're caring for an aging parent. They're about to have a baby. They're getting married, divorced. It's those times in life when people really need to take a look at their entire, what we call their estate, and then update that. And so this is where the life milestones give us all kinds of opportunities to help the credit unions really be able to provide benefits that meet their members where they are. So that's where we've added some new things recently around Medicare, and then we'll be adding funeral planning and funeral insurance, some of the things that might have gotten lost in the past. But when you're going through these life milestones, these are the critical types of benefits and resources that you need. And there's so much garbage out on the internet that we want to make sure that people have a really good source of education, but then not that, the tools and then the products that they choose those.
I mean, and what I'm hearing too is from the credit union standpoint, obviously people helping people, you want to be there for your member in their time of need. This is the very clear signaling mechanism to say, hey, we're doing this right now. If you haven't thought to reach out to the credit union, it lets the credit union know that something's going on that they can potentially be of great service on.
Oh, and they are, like, so many of the credit unions that we work with, they do such a great job when they'll sometimes call us with their members, and they do such a nice job. And the reason we don't charge any fees to the credit union to get started with us, or even when we're working, and we send all kinds of educational material. We do a webinar on what we call the inheritance drain for them. And this is one of our best webinars around how do you help your members, alleviate stress, hopefully during times that really can be stressful, but how do you help them save? And then how do you really serve in a role that can be there for them during some of these life moments that are these life milestones that we call them, that are so critical in making sure that you get things right and not going out and God bless ChatGPT and the things like that, which are wonderful in some cases, but wow, you really need in this type of world, you really need to make sure that you have help that you can trust, and that's where the credit unions do a great job.
I just wrote that. I remembered you saying that phrase inheritance drain during your presentation, which to me is kind of like another way of phrasing in a slightly more dire sense the great wealth transfer, because it's also the risk.
Yeah, so and the great wealth transfer we're talking about, the 84 trillion and everything, and there's so much money that's going to transfer now. But the reason we use the term inheritance drain is that it used to be 3 to 8% might be lost on legal fees and things like that, and court and all that stuff. But it's gotten so much more expensive that when we've been working on things, we're just like, wow, so many people have failed to do an estate plan that it really is an inheritance drain.
Now, you mentioned no setup fee. Help me out on a couple things here. First off, is there any integration? How do you actually interact? How does the credit union implement your services, and kind of steer? Does it work within their platform, or how do they get to you? And then also, what is your revenue model?
So, two things. First, what we do is we work with the credit union to set up a co-branded site and provide them with information and marketing materials so that they can offer Gentrio to their members. They can help educate their members, and they have that co-branded website and co-branded like marketing materials, posters, brochures, etc., so that they can be a part of helping their members. And then they turn them over to the Gentrio platform as we hold all the liability. And we want to make sure that we are helping people create a very personalized, state specific, complete estate plan that works for them.
I remember you mentioning that state specific is a real key, because a lot of other things, this is very unique to where you're residing, right?
Yep, absolutely. Because not only is each document particular to each state and how they get it executed or made legal, like signing it, notarized, etc., but each state has different execution rules for each document. And so with Gentrio, it's not just a cookie cutter platform where you go in and you put in your name, etc., which those do exist out there. What we do is we tailor the experience so that if you're coming from a very complex situation, like you have a blended family, you have multiple children, you want to exclude some, or you want to give specific gifts or give gifts to charity, we can handle the complexities of that. Or if you need something that's very simple, like just a quick will, within minutes, you can go in and say, I want to leave everything to my spouse. If my spouse predeceases me, everything to my children, and here are my children's guardians, so that in just a couple of minutes, you can create a legally binding document. And what we want to do is meet the customers where they are so that everything's written in everyday English so they understand what they're doing, what the implications of the decisions are. And throughout the whole process, if they need help, we have FAQs, help along the way. And then we have technical coaches that while we don't give specific legal advice, we can make sure that we're helping our users no matter how well educated they are in technology or how much help they need. We help them create a complete estate plan that works for them and protects all that they love.
Got it. Now, you mentioned meeting the customers where they are. I'm looking at your website. It is a consumer-facing website. How do you work directly, consumer direct, as well as through the financial institutions?
We do, but we don't advertise. You won't see Gentrio there. We primarily work with the financial institutions. But the reason we have that is that we have in Gentrio, the Gentrio Digital Vault. We call it our Gentrio Life Safe.
I was going to ask about that. I thought that
Yeah,
also.
and so you get to save and share documents, but not just documents, things like medication lists, doctor's information, and we have tools like the instant access button. So when emergencies happen, you can share all that information, and all of this is included. Everybody always asks us, well, wait, I have to pay extra for that? No, you don't. It's all included because we want to make sure people get to use all of these tools. So everything is built into Gentrio, and this is why we have a 92% retention rate over 3 years, because once people come in, they find
the individual, the consumer retention rate, not the credit union retention rate.
but yeah, and thankfully no one's left us on the
There we
credit
go.
union
Because I was going to
side.
say that's a lot. It's a much more impressive number when that's at the individual.
No, and the reason we do some of the outward facing things is that some of those friends and family members, they haven't yet joined the credit union, so they also though see that they probably something usually happens, and so they say, okay, well, I need this too. So that's why they can come directly to Gentrio, because if they for that $100, they're members now. This is an incredibly affordable product where they can do their living trust if they want to. They can do their will, healthcare proxy, power of attorney. They get the digital vault. All of that's included. And then the next year it's $50. And again, that's the whole vault. They can update their documents anytime. And we find that that's something that is critical because members, their lives change. And so the credit unions can go offer this to their members. They can buy licenses, they can mark it up. Some people roll it into other packages and say, hey, we're going to bundle this in and offer it to you. So we're pretty flexible about how we work with the credit unions to make it successful.
And it's a la carte. You don't have to run through the whole thing. It's not going to get lost if you don't complete everything.
Absolutely.
That's
It's all
right.
saved so that they can come back and they can start and finish things separately. They can make updates. They can use those life milestones to see how those life milestones trigger changes to their estate plan. And all of that is all saved so that we make it as easy as possible for the members to use.
Got it. And again, you mentioned at one point, kind of the member moves over to the Gentrio platform. Is it like your credit union name powered by Gentrio or co-branding, or how does the visibility work?
So we actually co-brand all of our marketing materials and the website so that it's solutions and it's education provided by the credit union that then they contract with Gentrio so that Gentrio helps the user create the estate plan that works for them. So we really work hard to give tools to the credit union so the credit union has an opportunity to reach back out to their members and provide them with a really affordable solution to a need that everyone has.
Yeah.
So
And some we do not white label. I want to make this point. We don't white label because you want us to retain liability, the customers, and there are other folks that are out there that are paying to white label some of these solutions and things like that. You don't need it. We can be up and running in less than a week, and we retain all that liability, and we'll do everything we can to promote you all. But you want people knowing that, hey, there's an expert doing this for you. We have a team of legal experts that work on this every day.
How does that work on an ongoing basis once you get to year 2 or year 3 of the relationship? Obviously, the outreach to some extent is still coming from the credit union if the life events create a need for other financial services. How does that back and forth work?
Absolutely. So what we do is we actually work with the credit union so that we're helping them continually provide answers throughout those life milestones and linking them back to the credit unions themselves. So we help the credit union continue to provide education. We provide information to the credit unions so that they can go in and they can see how their members are using Gentrio, what documents they create, but we do not share specific information. So we'll help them see people are creating wills or living trust or healthcare proxies, but we never share their information directly. And because the users maintain their own privacy and they, for security purposes, choose who sees what. But what we want to do is create a direct link during those key decision-making periods, like those life milestones, so that people know how they can go back to the credit union. We do want to maintain privacy. And so we want to allow the credit union to see that people are using it and they're creating these documents, which will help them provide additional educational opportunities. But we don't want to share direct information because that is owned by the member itself.
Makes sense. Well, great. How do people, I'm sure there's going to be some credit unions out there that want to find out more. What's the best way to get in touch? The website or
Yeah. So gentrio.com, GENTREO.com. And then the one thing I want everybody to remember too is there's no upfront fees.
And we're happy to share additional information about how we're helping these credit unions educate and further protect their members and make it easy, fast, and affordable for them to do so.
Perfect. Renee and Julie Fry, co-founders of Gentrio. Thanks for taking the time, and congratulations again on a great presentation.
Thanks so much, Glenn.
Heading in a slightly different direction from there, another topic that I guess if I really stretch, I could probably tie the two together: early wage access. If you think about retaining your customers, and you think about especially people on the younger side of their life cycle who are trying to make ends meet, particularly on the lower ends of the economic spectrum, who probably have less predictable cash flow. Early EWA, early wage access, has obviously made a big push. You hear a lot about it in some of the folks. A little different product, but Chime made a big push with the whole notion of getting your paycheck a couple days early. That's not what these folks do. Veep Software was on stage. There were a couple of solutions that actually scratched this itch that were on stage this time. This is the one that really caught my attention, and let's have a listen to what Veep Software, the angle they're taking with bringing early wage access through the financial institution channel. Here at Finovate Fall with the first company that earned a little tick mark on my list as I was going through that really caught my attention in the Monday presentations. Veep Software. I'm here with John Wankowicz, the Chief Operating Officer, and Sharon Kirby-Wright, the Head of Global Partnerships. You are a early wage access company, which I know there's several of them out there. You started with, I think, the more traditional model of offering it through employers, but what really kind of caught my attention is now you're looking to offer it through the financial institution, the bank and credit union space, and that's a pivot that you found to be an appealing opportunity?
We did. So our DNA, again, Veep is part of the Black Dragon Capital private equity portfolio, and our DNA is building innovation for credit unions. Okay. And so when we kind of looked at the market and we looked at really where the innovation was going, and in particular we looked at how Chime was growing and how Chime was using this product for acquisition and growth, we thought it was a natural pivot for us to take our platform, retool it and build it from the ground up from a risk management and member wellness perspective, and allow credit unions to compete with Chime.
Well, I remember Chime made a lot of hay in their advertising campaigns just on the idea of getting your paycheck, a day or two early. That's not what we're talking about. We're basically providing access anytime across the pay cycle.
That's correct. It is any time between the pay cycle. Yeah.
And I think I remembered seeing some statistics on the screen or during the presentation about the number of people who just think of this as a natural place to get this through your financial services provider.
It is.
Yeah, I mean, I think what we've seen in the employer side of this, which has been around for 15 years now in the US, is that about 80% of all US workers, the US population, expect access to their pay and would move to an employer that would offer it. And I think what we've seen here at Veep is that actually now it's time for the banks and credit unions to be a part of that transformation of this space. People absolutely need access to their pay when they need it for all sorts of different reasons. And we are just thrilled that we can now bring that to the credit unions and the banking space as well.
And John, I think you mentioned part of the reason that this operation was spun up within the private equity firm was kind of as a response to payday lending, which is obviously an inferior from an economic standpoint to the employee way of doing this.
It is. Our private equity group founder and chair, Luis Hernandez, very philanthropic, and what he saw in the communities he was serving was an overuse of payday lending. And so he kind of incubated the idea, actually pulled together some assets and launched the first iteration probably a few years ago. And so it was really in the fall and really in the spring of this year when our CEO, Drew Hyatt, and myself said, hey, listen, we have to bring this to the broader credit union and bank space.
I was going to say, it is banks and credit unions, correct?
It is banks and credit unions.
Now, the one thing I noticed is you actually showed both the view that an employee, the borrower, would see, as well as the view of the lender, in this case, the financial institution. There was a health barometer that I thought, and I don't know how typical that is in other solutions, which is pretty helpful to understand, hey, do I have the money to cover my bills?
Yeah, and so Sharon has a great way of describing the duty of care we have to the end user, in this case, the member or the customer, right? So, when we talk to credit unions, and we talk to the chief member officer, the chief experience officer, right? Everyone knows the worst experience a member or customer can have is going NSF.
Yeah.
And it's something that it's typically not the credit union or bank's fault, but
Right.
the first thing they do is they pick up the phone, they call, and they
Exactly.
complain, right? And then they are hit with a fee, and we know a number of institutions trying to drive strategies to reduce that kind of fee.
To their credit, since that is fee income, that can be very helpful.
They really are, but they have a wellness capability that they're kind of looking at. So we said we create, this is a scoring, this is not an underwriting product.
Right.
So we create the score. It's comprised of thousands of different data points in our AI models, which we're really proud because they're patent pending, which is a process to go through. And that wellness score is a predictor of when the member or customer could potentially get in trouble, whether they run out of cash, could be seeing some extra maybe fees that they don't typically see. And that's actually very, very customizable.
I was going to say, because I'm remembering you had the one view of that goes out to the consumer, but then the piece I thought was really interesting for the financial institution, there's basically, I think it was like you put things into tiers where you're like, and then you can decide, okay, and you say it's not underwriting, but on the other hand, it is kind of being able to differentiate between your member base of, I'm willing to extend this much to this person and maybe treat another category a little bit differently. And there were several criteria. I don't know which one of you want to take
I'll
that.
take that one. Yeah. So again, we've building financial solutions, and particularly regulatory and compliance solutions, is in our DNA.
Yeah.
We've done it forever. Core systems, digital banking solutions, origination solutions. So we knew we had to make this easy to set up, and we had to build it from the ground up with risk management and compliance in mind.
Yep.
And so that's what you see there.
And it's all configurable.
It's
to
all
the individual
configurable.
institution.
Yeah, it's all configurable, right? So, and that gives, we almost look at it as a dual level of controls. You have the AI models, which is doing the risk analysis, and then ultimately the pricing analysis as well. But then you have all kinds of controls
And the human in the loop.
that we can just set up, right? Because this is a product, like all products that get rolled out, as you want to have a crawl, walk, run approach. And so we've thought very much about, okay, we know there's going to be big questions about compliance. How is this going to work in the back office from an operations perspective, right? What can we think about kind of driving there to really make this as risk management top of mind as possible?
Yeah, and that dashboard that I saw definitely did the trick, especially if you have the control of being able to say, okay, once somebody's in one of those buckets, I can extend this much money. I can, I forget what the other thresholds were.
All kinds of thresholds. It could be, how you're looking at certain activity. When we have the ability, we can go out and we can actually determine, time and tenure.
I remember job tenure, and I think the other one that obviously comes up on these types of things is income consistency.
Yeah.
I mean, is it
Income
simply a
consistency.
salary job that hits every 2 weeks? Is it, a variability because you're dealing with gig economy or overtime and things like
Yeah,
that?
that's just it. The sources of discretionary and non-discretionary income are vast.
And they're becoming more and more
And they're
prevalent.
becoming more
in
and
the-
more vast,
yeah.
right? So we really, that's a big focus for us.
Now, Sharon, you're focused on global partnerships, and I
Yes.
know you're also responsible. You're launching this in the UK as well.
That's right, yeah. So, our first footprint that's going out globally is more from our employer side of the business, but there absolutely is an appetite for us to take to the banks and credit unions and building societies, as we call them in the UK, and take it further afield, because this need isn't just in the US. I mean, we're seeing, like we said, 20% of American workers having access to their pay early now through their employers. We want banks and credit unions to be a part of that. 1 in 10 in the UK It's the law in 4 countries in Europe to give access to your pay early if you ask for it. So
I'm sorry, 1 in 10?
So 1 in 10 workers in the UK
Okay.
are currently using earned wage access.
I was wondering how is the payday lending phenomenon as big there?
It
and
definitely
is the
was.
expectation?
Yeah, it definitely was. And I think, as always with the UK, we follow the US very closely in many trends and different things that develop. And the thing about early access to your pay, be it through your bank, your credit union, or your employer, is it's a preventative thing.
Mm-hmm.
So it's about being able to look ahead. And what Veep has been able to do now is help people look ahead with great data, which has never existed before, and do preventative things, be that asking your employer for an extra shift or seeing that you're going to go without funds and actually moving some money around. So it does all the things that the side of lending that we don't like quite so much is there to catch when people fall, and we want to give people advice.
Strike.
Absolutely, preemptive strike is a lovely way to say it.
So, and you mentioned like a wealth of data and
Yes.
global partnerships. I'm thinking it's not just the financial institution. I believe you get it from ADP. You probably get it from other payroll providers. So
Yeah.
you're getting data sources as well.
Absolutely, yeah. So we like to look into people's payroll. We can link into time and attendance. We can link into a POS if people are receiving tips. All the data points that are relevant for that individual that we can work with. The more we know, the better we can support, and goes back to that duty of care. The more we know, the best advice we can give.
And what is your revenue model to the institution, and they have the discretion to charge however they choose to their member base, right?
Our business model is real simple. It's a per transaction fee.
It's literally volume based.
It's literally volume based,
Okay.
right? And this really is a no-cost solution.
So it's
for
not
the
heavy
banks
minimums or anything.
No.
So
for
from
the
a
banks
credit
and
union standpoint,
yeah.
I mean, even if you're a small player, there's not a prohibitive
it's not.
entry point.
There's not a barrier to entry.
Gotcha.
Yeah, and so we work with the banks and credit unions around the pricing. Again, we don't just come in with the product. We actually come in with a rollout strategy.
So what's your status at this point? I know you're new in the market. Where do you stand with the credit union
we
bank
have
space?
on our employer space. We have one very large employer that's up right now. So we just launched this product probably a couple of months ago, I think. And so we're out talking to a lot of credit unions, a lot of banks, and so we're just in the early stages.
This is really kind of the coming out party.
Yeah, it's pretty much a coming out party. I think the one thing I'd like Sharon to touch on, because this is really important, is the duty of care in the financial wellness side.
We don't just want to give people access to their money without any thought or consideration.
Mm-hmm. That's always been my concern. It's like it's always, if you just
Absolutely.
start getting in the habit of always getting it early, you're in the same boat, just with an earlier pay period.
Yeah, and I think the thing, having worked in the employer space, and I've been in the space of early wage access for 7 years, and we've been able to bring some of those thoughts and learnings into what we're doing now with the credit unions and the banks, is that you do have to really give some thought to not just giving a blanket amount of money to everybody in the world. So what we've tried to do is, with all of our wellness scores and the data that we're looking into, is make it much more individualized for everybody. And then the thing that's really, really important is, don't just give people money without advice. So the whole point of wellness now is about giving people really relevant things for their life stage. So the financial wellness that we're going to announce, which will be in the next few weeks, happy to come back and talk about it more.
I was about to say, who knows? Maybe you'll give me an update before this actually goes live.
Yeah, maybe. We're working on the press release right now, but it is a global partner that's live in over 160 countries.
Oh, wow.
People on the ground in those countries, so very relevant financial wellness and education, because as we know, the advice to you, even from state to state in the US, needs to be very, very
Certainly
different.
across national borders.
Absolutely. And if it's my 19-year-old son or my 55-year-old friend that's working through their pensions, we need all different types of advice. So we will be able to provide, through the Veep app, structured, localized, individualized financial wellness advice, and then a portion of the money that you've already earned and have access to. So I think that bundling together comes back to that duty of care, and that's what we've worked super hard to try and build here. And I believe it's pretty much a world first what we're doing.
Now, you did mention the Veep app. This is also integrated into online banking, right? So people can actually access
So
it.
it will be embedded in a digital banking solution.
The idea is the best place to get it is
It's the best
directly
place
through
to
your
get it.
banking
It's-
relationship.
Yeah, and it's not our brand.
Yeah.
It's the credit unions
Clear.
and the bank bank's brand. So
Okay.
that's what
Perfect.
we want.
And the duty of care point, I think, just ties taking it full circle back into the credit union credo. Makes
Yeah,
perfect
totally.
sense.
And as I say, going back to, we have to, as we take this out to the credit unions and banks, look to the last 15 years with the employers and say, what are the lessons learned, and how do we move this forward to like a version that's 2.0 and maybe even 3.0? We're looking that far ahead now. So we bring those lessons. We've worked with people that work with employees across the US now for many, many years, and we've been able to adapt all those learnings and build out what we're doing now. So yeah, we're super proud of it.
Great.
And certainly it received an incredible response here yesterday.
I sure thought so.
Yeah.
So if people want to find out more, I guess people in this case primarily being the credit unions, but anybody else who wants to find out, I went out to the website. I guess that's the best place to do
Yeah,
it.
you can go to the website and
Veep.io, am I right?
veepsoftware.io.
Veep Software, and again, VEEP.
Yes.
VEP, yeah.
And I guess they'll be able to follow from there. I see you've actually got it broken up by employers versus credit
Yeah,
unions there.
that's
so-
right, yeah. And of course, they can reach Sharon and I on LinkedIn.
Perfect.
Yeah.
John Wankowitz, Sharon Kirby Wright, Veep Software. Again, was really impressed with your presentation yesterday. Thanks so much.
Thank you so much
Yeah,
for having
thanks.
us.
Thanks, Glenn.
There was still so much more going on in Finovate. We may wind up still yet doing one more episode with some of my favorites that I saw, but wanted to share those with you. And let me tell you now, the six. Last week we shared the 6 best of show winners as voted by the audience. Let me tell you the ones that actually got my vote, in case that's of interest to you. As always happens, I seem like I've got about a 50% hit rate usually, that about half the companies that I choose wind up actually winning the overall best of show. And as I always say, I kind of like that ratio. I wouldn't want to have it much higher because I don't think groupthink is a great idea. And I'm obviously looking at some different solutions from a different lens than other people. So I think 50% is a pretty good rate from a lot of different perspectives. But anyway, the best of show votes I gave out were last week's 2 interviews, and we'll post a link to last week's episode as well. Virtus AI and KSAP. Virtus AI, the one with AI in their name that actually wound up winning one. And KSAP, which also deals with the fraud issue that I mentioned was one of the recurring themes at Finovate on the demo stage as well. They both wound up winning and also got my vote. Veep Software, which I spoke to, these other 4, this time I was 2 for 6, I should say. Veep Software also got one of my votes. We just heard from them just now. I thought what they did was really interesting. Another one that I thought was maybe the best high-wire act I've ever seen at Finovate is a company called Collaboration Room. And again, you can check out all these videos at the Finovate website, and we'll post that link. Collaboration Room is a remote call center, contact center management tool that was developed during the pandemic and then kind of put on its own track after the person who started it made it into a separate commercial product. They brought on stage, they did a live demo where they had audio, video, and active, prompts coming from a split screen of 4 different people. So I've never seen as many touch points that could have gone wrong over the course of a presentation, and it came off perfectly. So I thought that one was very interesting, and in itself, just because of that, not to mention the value I think it can bring in terms of working in a remote environment, particularly with secure information, which is one of the keys. They had detection capabilities to see if a second person happened to walk in the room and might be looking at the data, for instance, or if a cell phone showed up in the picture. Interesting stuff. Anyway, I thought that one was really cool. Mall IQ, which has also caught my attention in the past, got another one of my votes. Basically using location data to trigger for events for follow-up to foster further engagement. It's not purely a credit union or financial services product, but that is a use case that I think is really interesting. And then finally, and this is kind of speaks more broadly to something we talked about before, AirKey, which is actually a subsidiary or a product, I should say, within Capital One. And this also ties into the fraud and authentication piece that was another key theme. They're offering one-tap card authentication, and with the issuer deciding when it's necessary to require that additional level of validation. That might be for card activation, it might be for funding of a digital wallet or some other unusual, kind of less common or maybe high-value transaction, remote transactions, whatever you choose to actually do it on. I thought it was a really cool solution. They actually, this is the part I thought was kind of interesting. They present themselves as AirKey. and that's the name you'll see that they present it under. But with full disclosure, they didn't try to hide it. They are actually part of Capital one of the few really large companies that gets up on stage at Finovate. There was another large company that got up on stage and put their name front and center, and that was LexisNexis. But then as we started to see the presentation, I'm like, wait a second, I've seen this before. And the two gentlemen who were presenting actually mentioned they'd been on stage in the past. They were a company called IDVerse, again, in the authentication, deepfake detection space. And they were acquired by LexisNexis, still running as an autonomous unit, but clearly under the LexisNexis umbrella. And this time around, Visa was on stage as well with a card control solution. So that was my list. We also talked about the full list of Best of Show winners. Again, you can find out more about that if you go back to last week's episode, or check out our website, or check out the Finovate website for that matter. They'll tell you who the Best of Show winners were as well. Okay, I know we're running long today. I appreciate if you've stayed this long. I'll add one more piece of news from the general world since we last spoke. The Fed did resume their rate cuts with 25 basis points. Ironically, and to show that the Fed is not all powerful, the market reacted by actually seeing mortgage rates rise after that. Go figure. It's not unprecedented, but it just shows that the Fed can only do so much in the wake of other financial news to drive the environment. But the 25 basis point cut is a item that we had on our bingo cards for this year that we're tracking, and the game is still going on. I'll post a link to that as well, so you can follow along with the Best Innovation Group bingo card game of events in the industry over the course of 2025. And no one's actually got a bingo yet, but we're getting there. And as the year ends, some of these things were things you really had to have a full year of progress to really measure if they actually happened. Things like inflation rates staying below a certain level, et cetera. So I got a feeling we'll see a lot more action on that front in the very near future. Thanks for listening again. My name is Glenn Sarvati. My firm is 154 Advisors, but I'm here on behalf of the Best Innovation Group. You can check them out and all the cool stuff they do at big-fintech.com. I know for a fact already, we've got a bunch of great stuff lined up, including for next week. We tend to have new content every Tuesday. That will be no exception next week at the very tail end of September. I won't tell you what it is, but I promise you it's pretty cool stuff. And I think I know already what we've got going on the next couple weeks. Then we hit the road again. There's all kinds of great conferences. I hope to see you on the circuit as things go forward. And if you ever happen to be out on the road, definitely do track us down, take a look, say hi to us if you see John Best or myself. And if you're interested in anything you've heard here, please do leave a comment. Or if you haven't already, please do like, subscribe, whatever you do to your podcasts. You can find us on Spotify, Apple Music, or always at the Best Innovation Group website under the Media tab. With that, more than enough content to chew on for a week. As always, we thank you for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.